So, let's dive into a pretty wild financial strategy, one that has a shocking historical precedent and, according to the analysis we're breaking down today, could actually be on the horizon. It's a proposed fix for a problem that seems impossible to solve, but the fix itself, it might be even more stunning than the crisis.
Everything kicks off with this number, $38 trillion. That's not just some random figure, that's the US national debt. It's a number so huge it's almost meaningless to us, and the scariest part is it's ticking up every single second. This is the crisis that sets the stage for everything else we're going to talk about. And this is where that huge abstract number hits home. For the very first time, the money we're spending just on the interest for our debt is now more than the entire budget for national defense. Just let that sink in for a moment. We're paying more to our creditors than we are for the entire US military. This right here is a major tipping point.
So that brings us right to the heart of the matter, the unpayable debt crisis. According to the sources we're looking at, the usual fixes, raising taxes, cutting spending, they just aren't going to cut it anymore. The problem is too big. We've entered a totally new and frankly much more dangerous phase.
And this chart, it lays it all out crystal clear. That taller bar, annual interest on debt, isn't just a budget line. It's becoming a fiscal black hole, sucking up a massive chunk of our country's revenue. This is what the experts call fiscal dominance. It's when the debt gets so big, it starts calling all the shots on our nation's financial policy.
Okay, so if the old tools are broken, what's left on the table? Well, that takes us to the main event, a proposed plan called a strategic devaluation. It's highly unconventional and, deeply controversial. It's a plan to basically hit the reset button on the whole financial system.
And here is the big question, right? It sounds completely impossible, like some kind of financial magic trick. But the strategy we're about to unpack suggests there's a way, a playbook even, to do exactly that. The idea isn't to pay the debt off. It's to redefine its value so much that it practically vanishes.
Now, it is absolutely essential that we get this definition straight. This isn't about defaulting on debt, not at all. It's a deliberate government move to make the dollar itself worth less. So, by revaluing assets it already owns, the government creates a massive paper profit, which then unleashes the inflation needed to destroy the real value of its debt. You'd still owe the exact same number of dollars, but each of those dollars would be worth a whole lot less.
The economic engine that makes this all possible is a concept called seigniorage. Normally we think of this as the tiny profit the government makes from printing a $20 bill. But in this strategy, we are talking about seigniorage on a colossal scale. By just declaring an asset on its books is now worth, say, $1 trillion instead of $1 billion, the government basically creates a massive profit out of thin air.
Now, this might sound like some crazy futuristic theory, but guess what? It has happened before. The whole strategy is built on a playbook written almost 100 years ago by none other than President Franklin D. Roosevelt during the Great Depression.
This quote from the source analysis really hits the nail on the head. This isn't just some vague historical comparison. The whole argument is that the exact steps taken back in the 1930s provide a legal and operational blueprint for a modern-day reset. History isn't just rhyming here. It's literally a step-by-step guide.
So let's look at how this played out. First, the government seizes control of the asset, in this case, gold. It forced the public to sell it to them at the old low price. Then, once all the gold was safely in their vaults, they passed a new law. And with the stroke of a pen, they declared a new, much higher price for gold, which instantly devalued every single dollar in existence.
And if you look closer at that Executive Order 6102, wow, this was not a friendly request. It was a mandate, backed by some really severe penalties. The government didn't just buy gold. It legally forced its citizens to hand it over at a fixed price, right before it turned around and revalued that same gold to a much, much higher price.
Okay, so that's the history. Now let's fast forward to today and see what the modern version of this plan looks like. It's called the Gold and Bitcoin Reset. The playbook is old, but the assets are a mix of the ancient and the digital. The whole strategy has been updated for the 21st century.
This is where things get really fascinating. Right now, there's this enormous untapped power just sitting on the US government's balance sheet. Because of an old law from the 70s, the biggest gold reserve in the world is officially valued at just $42.22 an ounce. That's a total book value of about $11 billion. But at today's market price, it's worth over $1 trillion.
That massive gap is the hidden capital at the very heart of this revaluation plan.
And according to this analysis, the groundwork for a new reset is, well, it's already being laid piece by piece. You've got executive orders aimed at creating a strategic Bitcoin reserve to centralize all the crypto the government has seized. At the same time, you have proposed laws like the Bitcoin Act trying to make Bitcoin an official national asset. Put them together, and you have the policy framework you'd need to include a digital asset right alongside gold in a future revaluation.
So what would this revaluation actually look like? What's the magic number? Well, the analysis proposes a new official price for gold. Not $42, not even $4,000. Get ready for this, $20,000 an ounce. A number specifically chosen to create enough capital to completely change the country's financial picture.
And boom, just like that, at that price, the U.S. gold reserves are suddenly valued at $5.2 trillion. That's an instant accounting gain of over $5 trillion, created without raising a single dollar in taxes or selling a single bond.
But wait, it doesn't stop with gold. Remember that strategic Bitcoin reserve? The other half of this plan has an equally mind-blowing target price for Bitcoin: $1 million per coin.
At that valuation, the government's centralized crypto stash would generate almost another $1 trillion, $880 billion to be exact. You're combining the world's oldest money with its newest.
So you add it all up. The grand total from revaluing both gold and Bitcoin comes to over $6 trillion of brand new, debt-free capital on the government's books. And we have to remember the key point. The goal isn't to pay off the debt with this money. The goal is to create the conditions to inflate the debt away.
So this leads us to the most critical part. What does a move this massive actually mean for the economy? For you? For me? Well, it kicks off what is basically the great wealth transfer. This table right here, this shows you the entire endgame. Now look closely. The nominal debt, the actual number, it stays the same, still $37 trillion. But the real burden of that debt, what it's actually worth in purchasing power, it collapses. In this scenario, $24 trillion of real debt is just erased, gone, poof. The government pays back its loans, but with dollars that are worth just a fraction of what they used to be. And this is exactly what a wealth transfer looks like. It creates very clear winners and very clear losers. If you hold scarce, real assets, things like physical gold, Bitcoin, real estate, stocks, your nominal wealth skyrockets and your purchasing power is protected. But the losers? They're anyone whose wealth is priced in dollars. People with cash and savings accounts, retirees on fixed pensions, anyone holding government bonds. Their life savings could be effectively wiped out.
Which leaves us with one last, really provocative question to think about. The analysis we've walked through argues that the financial crisis provides the motive, and the 1933 playbook provides the means. So if that's true, maybe the real question isn't if a dramatic reset like this could happen, but when.